Welcome back in YouTube. So we can see that the S&P 500 is trying to regain that 3,800 mark that we've talked about on the channel substantially. I think that's where the line in the sand is for the bulls and bears. So let's get into exactly what is going on today. Over the last couple of days, we've been getting earnings coming in and out. Obviously, PayPal was a big one. Square, Coin, Starbucks absolutely killed it. And Warner Brothers Discovery is another one. So the stock I want to get into today is one that I covered not that long ago. I think I did a video, I'll leave it above, a few months ago. I got about a $9 to $10 price target on the stock. And what happened with Warner Brothers Discovery today? The stock did hit a new 52-week low of $10.76, currently bouncing off of those levels, sitting right around $11.10. So kind of in that price range, pretty much in that price range we talked about few months ago. And what I want to do today is just kind of update the earnings, as I think these earnings are pretty concerning. The amount of money, the amount of capital that the company is spending, and the debt levels, which we've talked about in the last video, are concerns for me personally. And obviously with that, we know competition is also growing. As far as content goes, Warner Brothers has phenomenal content, and it just stinks to see the company having more problems with the financial aspects of the business rather than the true competition of content, because I do think they are a competitor when it comes down to the content level of things, but when it comes down to earnings and the balance sheet, we have concerns. And when we bring it down to a total revenue, just absolutely smashing it, that is obviously not the problem. What we have to do is come down to total costs and expenses, and we see here that the costs and expenses are exceeding what top line revenue is. And this is something we've talked about on the channel with a lot of growth companies. You hate to see it with more of a well-established business that has phenomenal content and a unbelievable opportunity, that where you're starting to see the expenses outpace the revenue is always a problem, and we're obviously seeing the stock being punished for that. And when we bring it down to a per share basis, they're down $3 a share for the year and down almost $1 for the quarter compared to 2021's third quarter. It was 24 cents. They're obviously trending in the wrong direction from a per share basis. And then we can see here that obviously there is a lot of shares on the market at 2.4 billion shares on the market, which comes down to a bottom line loss of almost $3 billion for the quarter. So cash and cash equivalents are coming down as well. But we do see here that future revenue could be kicking up here, as receivables are at $6.6 billion. So they have a ton of receivables coming in here, it looks like, throughout the next few quarters. When we look at the debt side of things, this is the big concern that I have, guys. Almost 50 billion in debt, and they have roughly, a little over 2 billion in cash. And they're burning cash. So these are the concerns that I've had with the company. And that's why I've been leaning more towards Paramount Pictures. Even though the content library is not as extensive as a Warner Brothers, I feel like the balance sheet, the debt is a little bit more controllable. And the fact that, I think they're a little bit more conscious when it comes to the financial aspect of running the business. So therefore, that's why I've leaned towards kind of Paramount. I don't think it's overall better content, and I don't think it has the ability to capture as much revenue 10 years from now, but I do think it's a little bit more of a safer investment. Total Q3 revenue reported was 9.8 billion, which was revenue decrease of 8% due to FX, which we're seeing across all the companies that are doing business globally. A net loss of 2.3 billion, which included a 1.9 billion dollar amortization from acquisition related intangible assets, and 1.5 billion of pre-tax restructuring and charges. Ended Q3 with 2.5 billion of cash on hand and 50.4 billion of gross debt, of a net leverage of 5.1. So it looks like they're reiterating EBITDA guidance of 9 billion to 9.5 billion. So I have to adjust that as well. When we bring it down to an EV to EBITDA multiplier, we can see here that they're trading for a 9.3. The sector median is 7.7, but I don't think that's accurate. I actually think the sector median is double digits. So we're going to use 9 as a safe jumping off point for Warner Brothers Discovery. And if I'm looking to get a double digit return, I need to be buying Warner Brothers stock right around $9 to $10. So I'm going to just give it a $9.50 price target for me, guys. Obviously I didn't listen to the phone call. There's probably a lot of things I'm missing, but just kind of a quick update on where I was originally to where I am today on the stock. Not a huge difference. But yeah, still a difference. So we basically go down to a $9 to $9.50 stock for Warner Brothers Discovery, which it's getting pretty darn close to that wheelhouse. So another couple days of selling off. I would say that, this one is a little more risky, guys. I just want to be completely honest. This is a very risky stock with the amount of debt that they have and the amount of cash flow. And I just could see them, in order to keep up with the content, in order for them to keep their balance sheet clean, I could see them having to raise capital probably through share dilution here. With the amount of debt that they have as well. So, there's definitely a lot of concerns with the company. Me personally, I'm probably going to stay away unless it got super, super cheap from these levels. But the content is just phenomenal. The content is just really, really, really good content within their library. So it'll be interesting to see if they can right this ship and get things on the right track. But as always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.